what do all these trends mean for the stock market? Here to answer that, Robert Pavlik. He's Chief Market Strategist of Banyan Partners. Bob, thanks for joining us. I just want to ask you, we've been talking a lot about the winter, thaw and, spring blooming and all of that. What about the stock market? Are we going to see spring fever in the stock market at some point?
You're certainly seeing that right now. The market is coming back off of its lows, and I think that there's a potential for this market to even reach about 1960, but I think there is going to be periods of resistance. Certainly, there's going to be questions about earnings season, about what that's going to do to the full-year earnings forecast. There's the potential for the full-year earnings forecast for the S&P 500 to be taken down a little bit if we don't see that consumer spending or business spending pick up as the year continues to move forward. I'm optimistic. I do believe that you're going to see a resumption in business spending, specifically capital expenditure expending from corporations. The companies, if you think about it, have really taken the easiest path to the return on investments. They've bought back their older bonds. They've bought back shares. They've refinanced. They've increased their dividends. They've moved forward as far as they can, basically, with that. Now they have to start planning for the future. Capital expenditures means more spending going on in the overall economy. It means a resumption in growth, and I do think that's going to happen later this year.
You know, Bob, you raise a very interesting point there, because companies have engaged in a lot of financial engineering to get their earnings per share up. They've done a lot of buybacks, which is one way you can do that. But it is much harder to engineer revenues. And earlier this week, we saw shy revenues from the likes of IBM and Google and several others. Where's the organic growth going to come from?
I think it's going to come from new products. I think, the report that we saw earlier this week with Google was very interesting, because people are now questioning Google's focus. Are they moving in the right direction? Are they moving in the wrong direction, especially with regards to drones and to Google Glass? But then at the same time, people question what Apple is doing with their cash. I think that that's the kind of market that has to be created going forward in this country. Not focus on what's already been in place, but create that opportunities for themselves. That's what opportunistic companies do. And again, I think that that's what's going to help drive this market going forward. That, along with capital expenditures, that along with a resumption or return to a more normalized interest rate environment. Once we get away from this artificially low interest rate environment that the Fed has created, banks are going to be more willing to lend. If I'm Jamie Dimon, I'm not going to be so interested in making a 30-year mortgage loan for 3.25%, but I am starting to become a little bit more interested at 4.5%, 5.5%.
All right, so Bob, as investors start sorting through various companies and going after the ones that have good fundamentals and real profits and stuff like that, what does that mean for the overall trend in the markets? Are we going to see this volatility, big sell-offs, big rallies, and a big correction?
I do think that there's a potential for this market to continue to have this volatility, this extreme volatility. When you come off a year at 30% last year and you're going to have an economy that's just barely moving forward above trend, that brings with it that volatility. There's going to be a question about what happens with interest rates. When Mrs. Yellen spoke about raising interest rates 6 months after the end of tapering, there was a market panic to some degree. But I think that raising of Fed funds rate is quite a ways off in the future, maybe a year and a half off. And I think that's going to be just fine. But when we get to the end of quantitative easing, the end of tapering, there's going to be questions about what happens with the market and interest rates. And I think that that's going to be your best opportunity to get into the stock market, to make your plans, to be opportunistic, to get involved with the cyclical companies, the things like industrials, technology, financials. I think that's your best play in this market.
All right. Thank you so much, Bob. Bob Pavlik, Chief Market Strategist of Banyan Partners.